me for weekly Sunday market update. My name's Jeff Pine and I'm a senior trader with Actions to Wealth who bring you weekly Sunday market update each and every Sunday. My thing is technical trading and I'm going to share with you in this session exactly what I'm looking for as the week begins. And that starts for me with having a look pretty much at what the week ahead looks like in terms of data releases. So let's go and have a look at that particular scenario and see if we can glean anything that's going to be upcoming. I use the Forex factory calendar to do that. Many and varied versions of this across many and varied platforms. Righto, let's have a look and see. We've got holidays tomorrow here in Australia. Fantastic. I'll have a holiday tomorrow. Well, not really. And China. On Tuesday, we've got pound news. Not such a big deal, that one. But this one is the economic data coming out of London at 4 p.m. Australian time on Wednesday, be followed by inflation data coming out of the States on Wednesday evening for me. That will be a bit of a mover of the market, one would suspect, as will the economic data coming out of the UK as well. So you'll be watching that with interest overnight on Wednesday for most of us. You will get the big one of the week, which of course is the Federal Open Market Committee's decision on interest rates and what their monetary policy looks like for the upcoming few months. A lot of speculation around that. May well depend on this data here that is released prior. So that's the big event overnight on Wednesday, going into Thursday. If you are trading the Canadian dollar, you'll probably be interested in what Governor Macklem says on Thursday morning, my time. Then, of course, during that morning, you'll have employment data coming out of Australia that will move the Aussie. So be aware of that. Then we've got producers' price indexes coming out of the States on Thursday evening, just to wrap up the week, just about wrap up the week. Also very, very important in terms of what the future looks like in terms of monetary policy for the Fed. And of course, one that I'll completely ignore on Friday, which is the Bank of Japan and their policy. I don't care, frankly, because I just can't get a handle on the yen at all. So I'll be leaving that alone as usual. Let's have a look at the currency indexes. Whoa, let's not. Yeah, there we go. The currency indexes will be of utmost interest, particularly around the Fed meeting this week. We'll try and get ahead of that by looking at what the individual currencies look like in terms of their support and resistance areas, because I'm a technical trader. The dollar is looking strong to me, having bounced off the base of this triangle, or wedge, call it what you want, and now looking to break this most recent resistance area here and head back towards the top of that triangle. I am bullish the dollar, and of course it had a big news event on Friday, that being the non-farm employment change, formerly known as NFP, which came out very, very hot. So I expect further upside for the dollar. The euro is generally the upside down version of what the dollar is looking like, and that is the case this week as well. So I'm a little bit bearish the euro. I'm not sure if it can get back through this level, so the downside may be limited. And again, the Fed's going to have a big say in what that week or midweek looks like for the euro versus the dollar. The Aussie dollar, similar to the euro, coming off resistance, having put in this massive rejection of the base of the triangle, now came or has come and tested the top of the triangle. It looks, for all intents and purposes, as though that is going to continue the downward spiral now, with a finish on Friday close to its low, thanks to that NFP number coming out very, very strong in the States, as were most of the currencies, of course, against the dollar being very strong because of that number. Kiwi survived a little better than others, and as it has broken out of the triangle and indeed retested this horizontal level, I'm a little bit bullish, the Kiwi, I've got to say. I think it's doing better than most. I wouldn't say against the dollar I'm bullish, but against most other currencies, I think this one looks to be outperforming the others. The yen, I'll quickly skip across. It's just a basket case and I can't get interested in it at all. Of course, the flip side of that is it can't keep going down forever. But when on earth is it going to sustain a rally? I have no idea. Canadian dollar, similar to everything else, which is weighted against the US dollar, these charts, of course, and closed on its low for the week, maybe looking to retest the bottom of that rectangle now. And I can't see a reason why I'd be bullish the Canadian dollar. Swiss franc, finally broken back into this ascending channel that I've had on the chart forever. It tried, and failed. But last week came back into that range. Interestingly, to my mind, it did not close on its low, considering that NFP number was so strong. And as I said, these currency indexes are weighted very much against the US dollar. So I think this is probably the best performer against the US dollar last week. Yes, it came off its high, but it's still a bullish candle. So maybe a little bit of downside, but I'd be looking to buy the Swissy against most other pairs. British pound, similar to the Aussie, similar to the euro, is at a resistance level, that being the top of our triangle. And I would be expecting a little bit of, we've already had a little bit of a bounce, but I'd be expecting probably a little bit more bounce than has already occurred. So where does that leave me? That leaves me with bullish the dollar, bullish the Swissy, bullish the Kiwi. I won't say I'm bearish the others, but I do see them at bounce points. And for that reason, I wouldn't like to be trading them long. Let's go to the charts and have a look and see what's about the place. The what I call game changer bars, which occur on the weekly chart for me, because that's where I do my analysis on a Sunday, and have a look at the weekly charts and see what they're, well, I won't say predicting, but pointing towards for the upcoming week. These bars give me a directional bias. They don't necessarily give me a trading opportunity just yet, but they give me a directional bias. So what I call a game changer bar is something that has potential to reverse the upward trend that you see here, is potentially reversing because the high of this bar is higher than the previous week and it closed on or near its low. Problem with trading that short right now is twofold, really. You are at a support level and you've got the monthly pivot directly underneath as well, which would potentially offer support to the market also. So that's a twofold thing. But the Aussie pairs did not have a good week. And of course, against the dollar, you can see that, like everything else, it just tanked as a result of Friday's announcement. And against the euro, the euro rallied against it, as did the pound. Might come back to the euro and the pound versus the Aussie a little bit later. But the Aussie had a bad week. Whether that continues, and we saw that in the index chart as well, whether that continues is, of course, up for grabs. But we do have news from the Aussie unemployment rate coming out on Thursday, I think it is, as well. Might want to get ahead of that that news if you have an opinion either way. Mine, as I said, is slightly bearish. The euro didn't have such a bad week against everything. Certainly the Kiwi and the Aussie it rallied against, but of course the dollar, it did not. And as I pointed out before, I think the Swissy versus the dollar did best of these pairs against the dollar. The pound had a mixed bag week. We've already seen it rallied against the dollar, also rallied against the Kiwi. I'm going to talk about this one in a bit as well. and of course didn't do so well against the dollar. The dollar, well, let's talk a little bit about the Kiwi first. The Kiwi against the yen had an indifferent week. Against the dollar we know about, and against the Swissy had an even worse week. So dollar, apart from ones we've seen already, dollar CAD, I think this is an interesting one for the week. I'll give you a bit more analysis on that in a little bit. And the dollar versus the yen came off its low, looks to be headed higher. And dollar versus the Sing, interesting dollar versus the Sing, because it is at a resistance level and looks on a smaller time frame. This one inside here is a daily rectangle that you see. Looks like it's headed towards the bottom of that. So Sing may be interesting against the dollar, but again, dollar does look bullish. All right, the ones I'm interested in. Let's go back and have a good look at those. Euro Aussie is the first. Now, Euro Aussie, actually, I got stopped out of this last week. I was short on it. But it did look very much like a false break was forming. And what I call a false break is one of my trade lines that I use was broken. Then we had some consolidation below it. Then we had a reversal bar, which re-broke the trade line. So came back inside that range, is what I call that, the triangle, and then retested it again, signaling the false break, which you could have traded. And of course, on the weekly chart, we saw the game changer bar. Again, the game changer bar being a bar or candle who's potentially changing the direction that we were previously in. So change of momentum. Could I trade this? Yes, I could. And I think it's probably one of the better ones in terms of a setup. And the reason I say that is because there's plenty of room here to take some profit before you hit a resistance level, which appears to me as around about that 166.55 mark. So I think this is potentially a trade tomorrow. Depends on, of course, if we get a gap in the market. I think an entry above the bar, maybe 5-10 pips above the bar, makes sense. And put your stop loss below the swing there. I think that would make sense. You could put some profit in the bank before you hit this level. And when that happens, get yourself into a safe spot, because every opportunity or every chance that this will bounce off this resistance level. So I think get some profit in the bank, make some money, but get yourself safe as soon as that occurs. That's Euro versus the Aussie. The next one I've got is Euro versus the Kiwi, actually. Let's have a look at that. Now, the Kiwi has had a pretty good old run the last few weeks, as you can see by this chart versus the Euro. There's one of those game changer bars that I talk about. And price went bang, 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 bang. Well, now we've got a game changer bar to the upside, suggesting that there will be buying. I'm actually against that, not in the immediate term, but in the medium and not immediate term. I'm thinking short here, not long. The reason I say that is if I look at the big picture here, this is the monthly chart. This level has been almost impossible to penetrate, and price has done it again. It's bounced off it, come back and retested it. So I'm thinking downside here, and I'm looking for a lower high. I'll go back to the weekly chart. That lower high could come at the monthly pivot. It could even go higher than the monthly pivot and find this level here, which is 179, so 1.79. I think would be an excellent place to sell this pair, Euro versus the Kiwi. If I could find on the daily charts something on, I don't know, Tuesday, Wednesday, that really suits that scenario, or that the word escapes me. That narrative is the word I'm looking for. If that were to be the case, you would see me trade this short. I don't think I'd be trusting the 4-hour chart until we got up to here. But if I saw a reversal bar either at the monthly pivot or in this area here, I'd be more than keen to trade Euro Kiwi short. So that's most definitely on my watch list, but I want to see that pull back first. Of the dollar pairs, I think pound versus the dollar is the most interesting. So let's have a look at that. That's the weekly chart on pound versus the US dollar. And what I see here is a lovely little tweezer top sitting at a resistance level, which is probably in that vicinity. You can see it's been a bit mixed here. You can see it's been resistance here. Came back and was resistance again here, false break of that resistance, and now we've all but retested that horizontal level. Let's call it we've retested that horizontal level because it coincides with our trend or trade line as well. The only issue I have with this is the proximity to the monthly pivot, which should provide support. So if you wanted to trade that reversal bar, which is a game changer bar, you probably need to get your stop loss above here, so around about 150. And you've only got 25 odd pips before you hit the monthly pivot. That doesn't make a whole lot of sense to me, frankly. The other way to look at that, of course, is erase the monthly pivot and think it's not there. I don't subscribe to that theory, because if you have a look at what the monthly pivot does, in particular to this currency pair, it hits it and bounces off it. It hits it and bounces off it. Struggles here, bounces, comes back to it, bounces again, and has already bounced off last month. That's what I would anticipate happen here. So that makes that just a little bit trickier. What I would prefer to do is wait on the daily chart and maybe find an entry on the daily chart in this vicinity, either as a confirmation of the double top, which would be, in my world, a lower high sitting in here somewhere. So if I saw that, in particular, I suppose at that level there, I might just draw that in so you can get a real good idea of what I'm intimating. So price bounces here in my world to set up a trade. We bounce here, we come up to this level, maybe even this one here. Either one would be fine. And then we get one of my game changer bars. If that were the case, then I think selling there makes sense. You could put your stop loss above that level or above the swings up here somewhere. And then you've got a scenario that presents far, far better by giving you a risk of, in the first instance, say about 40 odd pips. But in the second instance, let's say 87, and down here to the monthly pivot, it's just about 1-to-1. So you can actually put some profit in the bank there in anticipation that the monthly pivot will provide support for the market, which you would expect, and then get yourself safe. If it does reverse, as we anticipate it will, and come back down to here, then all your profit here is going to be absolutely juicy based on that entry that I'm suggesting. So pound versus the US dollar, if you are going to trade anything against the US dollar, given that there's big week for the dollar, I would suggest you get in there pretty early and get ahead of it. I don't think you'd get a chance afterwards, after the news or the data releases, because they're going to move the market pretty substantially. So as did Friday, as you know. So that's pound versus the dollar. The alternative, if you are trading, well, there's two alternatives if you're thinking of trading the dollar or with the dollar or against the dollar. And one of them is Kiwi versus the dollar. Let's have a look at that. Kiwi versus the dollar. Again, big game changer bar to the downside and very, very similar to what I just described on the pound versus the dollar. You've got the monthly pivot dead ahead. Well, have a look at the bigger picture here. There's a little bit of a theme unfolding, and I'll go a little bit wider so you can see it. And that theme is pretty much evident to me that every time we get a game changer bar to the downside, it certainly reacts off that. Another one here, down, another one here, down, and then you've got to wait till here, another one here, down, another one here, down, another one here, down, another one here, down, and now we've got another one. It's only small, but there it is, and it is at our resistance trade line, if you like. Horizontal level for confluence, not so sure about that. Not confident of where that level probably is in that vicinity, I would think, where it's been support here, both support and resistance here, resistance here, and now we've got a lower high based on coming back underneath that line. So I think this one, again, that's the monthly chart I'm looking at, don't forget. This is the weekly now. And similar to what I said on pound versus the dollar, I don't think it's a great trade to take as a weekly because of that risk to reward factor. So you've got 117 pips, let's say, trading into about 40. It's much, much better than the pound versus the dollar, I'd have to say. So if you wanted to take that on board, I think that's reasonable. But again, you've got to get yourself safe at the monthly pivot. However you choose to do that is up to you. Stop loss, probably above the bar. I think that would be reasonable because you're above this resistance area. And of course, it's been resistance here and rejected 1, 2, now 3 times as that level. So I think that one is probably okay and maybe even better than pound versus the US dollar. But the last one, well, it's actually the second last one, is dollar CAD. Now, the Canadian dollar, and I know I said at the beginning of this that I'm a technical trader, and I am, but you can't ignore data at times. And what we saw last week was the Canadian dollar or the Bank of Canada reduce their interest rates. And we've seen the strong jobs number come out in the US. And we're anticipating that may well turn the Fed statement, or I'm anticipating, that may well turn the Fed statement into something non-dovish, if I can put it that way, and maybe even hawkish for the US dollar. Those two things combined from a fundamental point of view in my world or in my head are saying that this is a trade to be taken. I wish I could erase this. Clear. That's what I want to do. There we go. So how do we do this? How do we go about trading this if that's something that you might agree with, or certainly something I'd be looking to do? And we've already got a game changer bar, as you might expect from last week's news, both Canadian and US. So can you trade that straight away? I think you can, and I do think we'll get more upside. It's just a matter of where you're going to put your stop loss, in my opinion, and I think that has to be there, around about the 135.75 mark, or even 135.80. But again, you've got to think reward to risk. Risk is going to be about 185 pips. Where are you going to take your first profit? You're going to let it go through that high and get to this high. I think I would be prepared to do that. And I think that's probably a reasonable place to take your first profit, 1.3881. So that's going to give you about 110 pips with a risk of 180 pips. I think that's quite reasonable. And that's what I will choose to do. But I won't do it now, of course. I'll wait until I see if the market gaps tomorrow as the market opens. And if that is the case, then I'll assess where the market actually is. It may even give us a better entry. I don't know. But that would be absolutely one that I'm looking for. If it does retrace, and I'd be looking for it to retrace to probably there. That looks like a reasonable level to me at 137.15. So I could even place an order now saying 137.15, but I won't because I want to see what the gap is. But I think that's a good buy level if it does pull back. If it doesn't pull back and we don't get a big gap in the market tomorrow, I think 5 or 10 pips, maybe 10 or 15 pips above the high here, and the stop loss down here would make perfect sense to me on dollar versus the CAD. Before I leave you, the only other one I wanted to look at is gold versus the US dollar. And this one, once again, is very, very interesting. The weekly chart is giving me something that's almost perfect. Not perfect, but it's almost perfect. Why do I say almost? Well, we've got to, and people will argue with me here and say that this isn't a double top. In my world, this is a double top. It doesn't have to be equal to the previous. But is that a top? Yes, it is. Is that a top? Yes, it is. What's two tops? Double top, right? That's my world. And now I've got the potential for this to be a lower high. Clearly, potential for this to be a lower high. If I go down to the smaller time frame, the daily chart. Well, let's talk about the weekly first. Game changer bar there suggesting downside, and here's another game changer bar suggesting downside as well. The only issue I have, and this is the imperfection that I was talking about, is that I haven't had a rally, and I like to see a rally before I get a game changer bar, just like that one, right? Rally, game changer bar, rally, game changer bar, rally, game changer bar. So I like to see a rally before then. Did we get it on the daily? Well, the answer is yes, we did. Because we haven't got a breakout, right? Why didn't I trade that false break? I don't know. But I didn't. So I think this is absolutely a great signal suggesting that we're going to get more downside in gold. Where to? Well, great question, of course. I would be tipping down there somewhere around about 21.85, so back through the 22 handle. And the only question I have is, can I trade it now or do I have to wait? Wait for what? Well, one of two things. The reason I won't trade it now is because of this level here. Because I'll be trading straight into it. And of course, the overall trend in gold is clearly bullish, right? So I've got to be very careful when I trade reversals as to get clear air, because any support level will find buyers. There will be buyers because they want to come back to trend, right? So that's the reason I don't want to trade this just yet. What I would be looking for on the daily chart is one of two things, as I said. First thing would be, as always for me, a false break of resistance. So that can be this resistance area. Doesn't matter if it's horizontal or trend, trade line, don't care. But if price were to find its way back up there, and I doubt it will, frankly, because it's going to take out this high. But if it find its way up here over time, we're probably talking next week, not this coming week, and give me something like this, so a lower high, anywhere in here is good. Monthly pivot would be great. If I saw that, that would get me short. The other way would be to use the neckline. Now, this is the neckline in my world. If that were to break and we got a retest of that, then I think your entry there makes sense, or there makes even better sense. So if that were to be the case, and that's probably the most likely scenario rather than this one, break and retest of that neckline, so 2283 odd, whatever it is broken, then we get a retest of that level. I'd be pretty confident that we're going to get more downside, and that potentially in my book is going to be 2185. So there you go. That's kind of my wrap for the week, and that's what I'll be looking for. I'll be looking for strength in the dollar, strength in the Swissy, strength in the Kiwi, and weakness in gold. If I can find an entry, I'd be more than happy. So I'm going to leave you with that, guys. I hope you have a wonderful week ahead. Trade well, and we'll catch you next time.